Nigeria's stock market experienced a significant sell-off following the central bank's decision to raise interest rates to a record high of 22.75%. This has raised concerns about the impact on the economy and prompted questions for capital market analysts. I'm joined by a research analyst at Chapel Hill Denham Securities, Nabila Mohammed. Nabila, thank you for joining me today.
Good morning. Thank you for having me.
All right. Well, since Monday, it was obvious that investors could read the policy direction of the Monetary Policy Committee, and then that was when we started seeing sell-offs. But then I guess you're also not surprised that this continued till yesterday, a day after the MPC decision was made known.
No, it's not a surprise to us. And the losses that we're seeing in the equities market is not entirely related to the MPR hike. I mean, we've seen that sentiment, build up since weeks before the MPR meeting was held. The MPC meeting rather was held. So, in my view, it is beyond just the MPR hike. Yes, that would have aggravated and sort of led to asset reallocations from money managers, just trying to take advantage of the high yields that they are seeing, especially at the short end of the curve. And given that there has been any catalyst so far that would spur positive sentiment in the equities market, I feel that has also contributed to some of the losses that we have seen in the equities market and some redirections to the short-dated instruments in the fixed income market. So basically, yes, there has been an increase in NPR, and for now, being that there is no catalyst that will spur sentiment in the equities market, we are seeing some portfolio managers, some money managers in general, just going to take advantage of the high yields that is beginning to present itself in the fixed income market. So, yeah.
All right, let's talk about this now. We see a movement, portfolio managers, investors, traders, and all of them, probably concentrating on the fixed income market at this point in time. But is there something that can change the tide for the equities market at this moment? Because we see the oil and gas index, which probably maintained 0.0 and all of that, but all other major indexes recorded losses. The banking index, for example, lost 7%, and we also saw that the premium board wasn't spared. So is there something, that can actually change the tide in the equities market?
So it's natural for the equities market to be topsy-turvy in different times, depending on the climate that we are in. And currently, we are yet to see some results really come out. So one of the things that will definitely spur investor sentiment, especially in the market, or trigger some kind of positive movement, will definitely be results releases, especially from the banks. It's natural for investors to take profit, especially if there has been significant rally. If we just look back at the start of this year, most of the banks recorded significant rally in their prices, and there was some form of capital appreciation, especially for investors. So it's natural for them to want to book profits. And we all understand that once they start to take profit, it means that there will be some retracement in prices. And when dividends are announced, it will translate to higher dividend yields for investors. So in my view, the catalyst that we should expect would be results releases, especially from the banks, which will be accompanied by dividend announcements. And this will definitely spur some sentiment in the market. And we also know that there is the presence of Airtel and Seplat that has that dual listing advantage, especially for investors, and they are still fundamentally sound stocks. So all these put together will definitely drive some form of market sentiments in the market, positive sentiments rather in the market, and it will serve as catalyst for a further increase in the equities market performance going forward.
All right. Speaking of results, we already have one result, which is Nestle, which we'll talk about, later on. But then some would really like to understand the correlation between interest rate hikes and, investor sentiments in the financial market, especially trying to broadly understand, the relationship between the equities and fixed income markets and, the role that MPR plays. Let's get your insight on that.
So I'll start by saying that when the outlook for interest rates is in the short term is to the upside, it means that investors will be looking forward to tapping into a high yield environment in the short term, and I'm speaking specifically to short dated instruments. So when that happens, especially when there is also some form of negative sentiment in the equities market. If we're just speaking to how the currency devaluation has affected some names in the consumer sector, for instance, it will definitely see some form of redirection towards the fixed income market. So the relationship is just more or less like when there is an MPR hike, and there are also other factors that are causing us driving some form of negative sentiment on the equities front, and nothing positive really at the moment. It is natural for investors to go and stake their tent and pitch their investments with the high interest which they are currently seeing, especially in the fixed income market. So in as much as there is no positivity going on right now in the equity space, there is really nothing that they would definitely want to hold on to in that space for now. So it just makes sense for them to take positions at the short end of the curve currently in order to earn some high returns on their investment. But as I said earlier, some of the catalysts that I mentioned will definitely see some form of positive sentiment. So that is really just the relationship between the increase in interest rates and how it plays out well for investors in the short term, especially when that is what the outlook is telling us.
All right, let me put you on the spot with this particular question. Is it all gloomy for equity market investors? Now, I believe discerning traders and investors must have realigned their portfolios like you talked about to hedge against this present risk. I'd like you to speak to us about what savvy investors do to reduce their risks, either before or in situations like this. And I think to a very large extent, you've sort of addressed that earlier. So maybe you just focus on what would be a good time for re-entry.
Retracement in prices, and there's an anticipation for positive results to come out, especially, let me speak to the banks now. We would definitely see that with this retracement, some investors will start to take position, and just in anticipation of that positive results that will come out. So most savvy investors will definitely want to look at how fundamentally sound the company is, news flows around what the company is doing, especially for the consumer names, what they are doing in terms of in this current devaluation or position in currency and how it is affecting their performances. So savvy investors will definitely be looking forward to that. And for an investor that has a long time horizon, like in terms of investment, he would not be shaken by this particular moment where we are seeing some form of dips here and there in terms of the prices of some of the stocks. Rather, he has a long-term view and believes that strongly in the fundamentals, and would be happy to take that long wait. We also have investors that are savvy and also looking for dividends, and those investors will also be looking for stocks that will give them high dividend yields. And at this point in time, when we are still expecting further dividend announcements, we will definitely see that some investors take positions in the bank. So looking at fundamentals is very important. Looking at news flows around what these companies are doing, given the current climate, is also very important. And of course, the companies, most of them have investor calls where they share some of these insights and just give investors some respite as to how they intend to rather solve some of the issues that their companies are facing. So these are the things I believe savvy investors will be looking forward to as they start a series of investor calls and engagements, and they also release certain news flows that will just give some form of picture as to how they intend to remain a going concern in the future.
Absolutely. Well, this is the point where we'll have to take a break, and when we come back, we'll be, focusing on a particular company, which we definitely need to talk about, looking at the news around that company. We'll take a break now. We'll be right back. Stay with us. Glad to know you stay with us. I still have Nabila Mohammed right here with me. Nabila, thank you for staying with me.
Thank you. I've been missed you.
All right, so I said before we went on that break that we'll be talking about Nestle Nigeria. So let's look at its loss before income tax of 104 billion naira for the year 2023. Now compare that to a profit before income tax of 71 billion naira in the year 2022. And of course, the company reported a foreign exchange loss of 195 billion naira. And that was the major reason for the overall loss reported by the company. What more do we need to know about this, and how is the company either managing its foreign currency exposure or mitigating its risks?
So thank you so much for the question. So I'll start by saying that we all understand how 2023 was shaped by the devaluation in currency. So it's not a surprise that for consumer companies such as Nestle that have exposure in foreign currency would take some form of significant hit in terms of how their performance will pan out. And I mean, 2024 started with that same particular trajectory, given how exchange rate has moved year to date. So there are, of course, this has translated to a negative equity position for the company. So we're definitely not going to be seeing the dividend payment as it was in 2022, and we'll definitely see that the company will come out to do certain things. Now, how do I mean certain things? To start with, we had a meeting with management at the start of this year, and we also expressed our concerns as to how they intend to remain profitable, given how the challenges in the macroeconomic environment has shaped their performances going forward. And they mentioned some things that they are in talks with. They said they are currently in talks with their parent company to see how the parent company can come to take advantage. So we will not be surprised to see if something similar that happened to Cadbury in terms of debt to equity conversion with their parent company happens with Nestle, given that they would have to reduce some of their FX exposure in order to manage the current situations that they are facing. So we'll not be surprised to see that happen when they conclude whatever talks they're having with their parent company. Would also may likely see them have some talks with capital market operators in terms of trying to see what's best to do in terms of rights issues or some form of capital raising that will provide some respite as to regards to their performance, at least in the short term. Now, what is the company doing organically? They've also mentioned that they are going to be looking inwards in order to see how they can cut costs and try to source most of their raw materials locally. That would be a very good thing for them if they can achieve that, and in the long term, we start to see that pan out. The initial points I made earlier were some form of short-term fixes to their current FX rules, which includes talking to their parent company and reaching an agreement as to how to reduce that particular exposure that is on their books. And secondly, they are looking at ways they can have engagement with banks and other capital market operators to see how they can raise capital just in the short term to provide.
All right, Nabila, let me come in here. Now, let's look at the growing concern of the company. A lot of investors or some persons really just want to hear something very simple. And the question is, should they be worried? Should investors and shareholders be worried, looking at the foregoing, the growing concern of the company and steps or measures that the company is already taking?
So like I said earlier, Nestle has been in the country for the longest time, and it's one of the companies that if as an investor you have a long-term view at it, you will know that this is just something that is for the short term. And as you ask the question, what is the company trying to do to solve this issue? In terms of looking inwards, what they are trying to do is, one, reduce their dependence on imported materials, trying to source some of their materials locally. They are also trying to make sure that they improve their product, they come about product innovation in order to still be appealing to the public in terms of having something to offer to the public. They are also definitely will not be surprised to see price increase from this front in order to keep margins up, and also look at another thing that they are looking at is how to optimize costs going forward. Right, so for an investor that has a long-term view at this company, it's just for the short term, because in the long term, this company is still a going concern, and the parent company to even start with would not want to have them lose their market, especially in Nigeria.
All right, thank you so much, Nabila Mohammed, for sharing your thoughts with me. I mean, a lot of persons were really concerned and worried about this particular stock, but it's a good one. You've tried to explain, what the growing concern is. Thank you once again for sharing your thoughts with us.
Thank you for having me.
Yeah, bye.